All right. Hello, everybody. Shane Carter here, Hampshire Capital, here with our VP of Investor Relations, Eddie Austin. And today we're going to be talking about something that you might consider controversial. We generally talk about real estate investing, but today we're going to talk about investing in general. So hold on. Eddie's got a lot to say about this, and let's kick it off. Eddie, welcome. How are you?
I'm doing really well. How about you?
I'm doing great, man. Great to be chatting with you again. Always love our discussions. So,
Absolutely.
Eddie, we're talking about investing, not just real estate investing in general. And tell us a little prequel about what you want to say about this.
So, all the time I get people that reach out to me. There's no doubt you can look at my Facebook page, your Facebook page, and people see that we're invested in real estate or in investing in general. You can tell that we're turning money. We're doing some trading, but they don't really understand that trading. So they reach out to me for, Bitcoin and Forex trading and Dogecoin and all these different things. And they try and sell that to me. And, sometimes when someone is selling something to you, they're the smartest person in the room. No doubt about it, because they know all the answers. Sometimes it's better to stop and listen and just rather than speak and remove all the doubt. So, I let them speak, I go through it, and then I start to turn that around. I try to turn them to an investor. And a lot of the times it becomes extremely controversial because they believe in what they're trying to sell you, that Bitcoin is absolutely the best investment on the planet. I disagree. And I think to really get to my point, whether that's stocks, bonds, mutual funds, all these different types of investments, even investing in gold. To me, I don't know where my money went. So if I decided that I'm going to put $100,000 in Bitcoin and I click the button that it's gone, I'm not smart enough to know where that money went. And I've never had someone explain to me with the correct amount of capacity that I can understand it to know where my money physically is. Or can I get my $100,000 cash back? I've even went as far as saying, I'll tell you what, I'll give you $1,000 and 7 days from now, and I think the cycle's 15 days or something like that, 20 days. In 20 days, I want to physically put 10 $100 bills back in my hand. So I'm going to take $100 in cash, I'm going to put it in a bank where I can wire it to you, and then I want to see my $1,000 in pure cash back in my hands in 20 days, that cycle. I've never had one say it can be done. Well, they've said it can be done, but they never wanted to prove it to me.
Yeah.
They said, well, the minimum investment's $10,000 and that's it. Well, I'm not going to play with 10 grand.
Yeah, sure.
If I got 10 grand, I'm going to put it in real estate. Maybe I'm going to go buy a piece of land and sit on it. I don't know.
Yeah.
But whatever I invest in is going to have a real address. All there is to it.
So look, you touched on some good things, right? There's digital currency, cryptocurrencies. I think just my own sense is that it's a great concept. I think there's I like this sort of decentralization aspect of it. I think that there's a future in it. It's extremely unstable right now. And I would find it very difficult for anyone to tell me why investing in cryptocurrency is a heck of a lot different than gambling, because I don't see very much of a difference as it sits right now for that particular asset class. Full disclosure, I do own some gold. I do think that some diversification of your net worth or your holdings is prudent. I hold physical gold, however, not EFTs, not anything digital. Actual physical gold, so I can actually hold it, see it. It's in a safe. It's buried under the tree in my backyard, wherever it is.
I like gold. Hey, one of the worst mistakes I think I made in investing, and it was very early on. I had a very good job, and I was making really good money, and my dad was a jeweler. And I said, Dad, I've got $25,000-$30,000. Where should I put it? What do you think I should do with it? And Dad says, let's go get you a gold bar. And I was like, a gold bar? Well, at that time, I probably could have bought a small gold bar, and gold then was not even, I think, double digits.
Sure.
It was less than $1,000 an ounce or whatever.
Sure.
So he's like, let's go buy, I got some people that's got gold bars and we'll go get you a gold bar. You put it in the safe. I'm like, it'll mold, it'll sit in the safe, somebody could steal it. Nah, I went and bought a car instead. Foolish. Very
Well,
foolish.
there you go. Now you touched on a good point. There's a difference between spending and investing. And a lot of people think that it's intelligent to have no payments and have a car paid off or have a house paid off or have this paid off and that paid off. And, to a certain extent, if you're at a certain place in your life, at a certain point in your life, there certainly can be some benefit to that if that's what you're looking for. But I think you and I could both explain why that's not necessarily an intelligent investment, right? As opposed to growing capital. You've got, especially in these inflationary times, even when debt is what, 5-6% right now, maybe even 7%. And your inflation is also 6-7-8%. So you're kind of just keeping pace, right? But prior to this specific time period here, the end of 22, if you were paying something off that had a low interest rate on it, like the 2-3%, 4% interest rates we've been seeing, well, then that's your rate of return. That's what you're getting for an investment when you pay that off, instead of investing in something that can get you a 10, 15, 20% annualized return.
Right. Well, and again, it comes down to assets and liabilities.
That's
Very few times is a car going to be an asset. It's just not.
It's just not.
I want to touch on something real quick. I think the number one best investment on the planet and the best ROI that there is investing in not the S&P but the S&B. I owe that one to Alex Hormozy. He was probably the one that said it the best, because I physically feel like if I had $30,000, the best thing I could have done with it was invested in myself. If there was absolutely nothing that I could fathom to invest in, and there was nothing that I could think about that I absolutely needed, I should have invested in myself.
Oh man, I couldn't agree more. That's brilliant. I love that.
Yeah.
The S and me.
Yeah. And then on top of that, whether that be investing in a real estate course, I think everyone that wants to go far in life probably needs an accounting background. Take some accounting classes, just so you understand balance sheets and you understand what a net worth, profit and loss statement looks like. Where to put your actual financial statement numbers at, and what each box needs checked and how it works.
Couldn't agree more, man. And for me, I would definitely say to invest in yourself. One of the main things that I did, and I fully believe in and encourage others to do, is get into a mastermind group, right? Get into a group, get into a room with other people who are at or above, preferably where you're going, where you want to be. And there's just no better way to elevate yourself in terms of your own mindset than investing yourself into a group. Pick your tribe, whatever it is. It doesn't have to be real estate, but whatever it is. Get into a group with others that are at doing what you want to do at a high level. Learn from them, grow yourself, grow your mindset. I can tell you that for me personally, I didn't become truly successful in life, in business, or in relationships until I gave myself permission, until I anointed myself as worthy, right? No one's going to do that for you. No one's going to tell you you're worthy. You have to anoint yourself worthy. And that's just a complete mindset thing to be able to give yourself permission to win.
Yeah. This is definitely another podcast, but real quickly, I will definitely say, and I say this all the time, some people get it, some people don't, but if you're the smartest person in the room, unless you're being paid to teach that room, and if you are, don't say past what you're paid to do, leave. Don't surround yourself with people that are not in a place where you want to be. If four of your friends smoke, you're probably going to be the fifth.
That's
so
right.
Watch who you surround yourself with.
That's right, man.
When I finally changed that mindset of who I surrounded myself with, I had a man ask me a question that left me with where I am today. And we were sitting across the table from each other. Big time real estate investor, owns a lot of a city. and he's been the developer for that city. He looked at me and he goes, Eddie, what is Eddie Austin capable of without a job? At the time, I had a day job. And of course, we all daydreamed about that. And we've all asked ourselves the question, what could I really do? But when he asked me that question, that was the longest drive home I ever had, because it made me think.
That's right.
So we'll definitely hit on that on another podcast. But back to this investment, here's why we choose that real estate, and especially multifamily, is the best investment on the planet. Mm-hmm. And here's where it's going to get controversial. In real estate, it is a real piece of property. When someone invests in Hampshire Capital, you have a physical address that you could go touch, feel, sleep at if you wanted to. It is a real piece of property. Most of the time, brick and mortar. It has a concrete foundation 200% of the time.
Yes.
It's not going anywhere. It survives some weather. It survives some things that's happened to it. It survives seasonal changes, and it's still standing. It is a solid foundation for what you invest in. And then number two, we have things that we put against our taxes, like debt, that make the taxes cheaper. So that's right. We have tax depreciation. We do these fancy things called cost segregation that allow us to actually pick out parts of the property that we depreciate faster than others.
That's right.
Then on top of that, you have cash out refinances. We can physically we have tenants paying off the debt. We're paying that down. We have inflation that is working in a positive manner, increasing the value of the property. It's appreciating over a period of time. Plus, at the same time, we're paying the property down. Mm-hmm. And then we pull out a cash out refi. And on the right piece of property, that can be $100,000, $1 million, $10 million of cash out refinance.
And tax-free.
And tax-free 100%.
Yeah.
And then on top of that, when we sell this, at this current time, we can 1031 exchange that property and again, reinvest back into a bigger piece of property. So I have these people reach out to me and are like, you need to invest in this Forex trading and Dogecoin and the S&P 500 and everything else. I'm like, no. You tell me, number one, where my money's at. Number one, that's what I want to know first. Tell me what my tax benefits are when I physically put that back in Eddie Austin's pocket. Mm-hmm. Tell me how I can get tax appreciation from it. And then tell me where it's at. Like, where's my money?
Right.
And then can I refinance that and get money back and not be taxed? No. The physical time that you take it out of the market and put it in your physical pocket, you're going to pay the highest amount of tax, and I've never been proved different.
Yeah, absolutely. Couldn't agree more.
And it's just why.
Yeah, we're investing in assets, right? Asset-backed investing is some of the most intelligent, prudent investing you can do. You don't have to be like Eddie and I. You don't have to have all of your net worth or 95% of it in real estate, but you should get in the game. You should get into real estate, get into it in a passive way, in an active way, whatever suits you and your individual tastes, but absolutely have at least some component of your investments be in real estate, because it's just the best vehicle we can find out there from a risk-return metric.
Yeah, and then let's talk about diversification. So that's the next argument everybody hits me with. You got to be diversified. Okay, well, I'm gonna be biased for a minute. I am diversified. We own properties in North Carolina, South Carolina, Texas, all over the United States. We own them in different states. Mm-hmm. All those states have different markets, different tertiary markets, different sub-markets. All those are different markets. And again, they're different types of investments. They are Class A properties, Class B properties, Class Cs. Some of them we're buying at C's and bringing to a B status. So we are diversified, but again, we are in the real estate game.
Yeah, that's right. And look, you just brought up a great point. Where else, can you buy something and have be able to, what we do as the operators is we can physically and fundamentally create value and increase the value of the property through intelligent management, through capital expenditures to improve the asset and charge more rents. And you can't do that with stock, bonds, mutual funds, cryptos. You cannot fundamentally add value to any of those. It's just not possible, right?
No.
So when you couple that with the fact that we can utilize leverage, right, and we can get, well, in this environment, let's call it 50, 60% leverage, but in other environments, perhaps 70, 75 is more reasonable. And you can use cheap bank debt to acquire a much larger asset so that our equity and our dollars that we're putting in are leveraged that much greater. And so we have an exponential return accordingly. You can't get that anywhere else. Nobody's going to give me a loan to buy more Apple stock or to buy cryptocurrency, right?
No. Well, I mean, it's like it's calling Bank of America and say, Bank of America, give me a loan that I can buy your stock with. They won't do it.
Right,
They won't.
Right. They won't.
Like they won't do that because, well, number one, it tells me they don't believe in their stock enough. If they truly believed in it, they'd be like, yeah, I'll give you $100,000 of invest back in our stock. Essentially, it goes back in our stock. It raises the basis value of the company, but they're still not going to do it.
No, they won't. You're right. They won't.
And then the last thing I would touch on, and for me, and everything that we do here at Hampshire is purpose. Is those guiding principles we always talk about. And the purpose, I get zero purpose from investing in the stock, bonds, mutual funds, crypto.
That's right.
The purpose that we are doing here at Hampshire, when people physically invest with us, we're taking a busy professional, doctors, lawyers, business owners that don't have time to physically go invest, buy properties, operate properties. We're giving them an opportunity to take that overage capital that what they've been fortunate enough to work hard for all year, and we're giving them an opportunity to invest that in a truly passive environment to where they are getting money back without having to worry about the three T's, right? What is it? The tenants, toilets, and termites.
Yeah.
That's what all your mom, pop, everybody else is going to say. Oh, don't own rental properties because you got to manage the tenants, the three T's.
Yeah.
Well, you mitigate risk by the education you have. So that purpose, I feel good that we are serving a purpose while we are taking people's money. We're mitigating their taxes by putting them in a not a tax-free, but a tax-reduced environment. They are physically owning real estate alongside us, and we help the money that we put into that. We again kick that back to the tenants that live there. We are buying an asset that is mismanaged, and we're buying an asset that is subpar, and we're bringing the actual tenant's lifestyle up by giving them a better place to live.
That's exactly right. Yeah, thank you for bringing that up. That was, when you talk about mission, yes, absolutely. Fundamentally, part of our mission is helping, intelligent investors invest passively in real estate. But the other part of our mission as a company is to truly create a difference in every one of the assets and every one of the communities that we work in. And we are actually improving tenants' homes, residents' homes.
Right. Yeah.
And the culture and the experience that they have in every one of our assets. And we take that very seriously. Housing is a fundamental need in society, and we are fortunate enough to be owners and providers, and in our case, very much improvers of those homes and for those residents. And we take that very seriously. So thanks for bringing that up.
Yeah. I mean, to me, the investment is infinite. We're infinitely involved with our investors. And then on top of that, it is full circle. It comes from the top side of our investments to helping our banks, to helping the community with better buildings, to all the way down to improving the tenants' lives. And that helps me sleep at night knowing that I created a great deal of purpose for everyone involved in the company. Absolutely everyone.
Amen. I love it. Well, Eddie, thanks for chatting. We appreciate it, and obviously we'll do this again real soon.
Yes, absolutely.
All
Have
right.
a great day.
You too.